Let's bring in Greg Branch. She's a partner at 1847 Financial, and Mike Santoli, CNBC senior market commentator. Good to speak to you both. Mike, we've got a smattering of earnings so far, and it's been quite a mixed bag, and no surprise, many companies are still, withholding guidance for the rest of the year. So really, this is all sort of no surprise here for the markets. Nothing new.
Not much new. The market is essentially written off this quarter in terms of really being any progress toward the longer-term earnings targets. I mean, just for an example, McDonald's missing slightly, 66 cents. Was it going to be 71 cents? On February 28th, the projection for this quarter was 217. Right. So the market has said McDonald's, yes, it's retaining market share. It's going to be fine. Most companies are in this position of getting the benefit of the doubt that they're not really backsliding unless they're in the travel area. However, McDonald's also is an instrument where you can get 2.5% dividend yield. So I think that push-pull is what's keeping the broad market supported, along with, of course, the big growth stocks that are beneficiaries of this environment. So I think it's pretty much a steady state during this earnings season where the 12-month forward estimates in aggregate are starting to curl higher, and that's giving a little bit of reassurance that this is a kind of hunkered down, weather the storm, and things are turning for the better down the road.
With all that said, Greg, how do you go through earnings season, and what sorts of questions do you want answered when you're on a company conference call if you know that the company is going to stay away from giving guidance for the rest of the year, and things, as Mike had mentioned, are fairly status quo at this point in the recovery off the bottoms?
Yeah, let's talk about two of the names you just mentioned. And so for McDonald's, what we want to see from them is to reaffirm their financial strength and assure investors that the dividend is safe throughout the back of the year. We expected weakness in Europe, where closures have been more significant, where traffic is down, where reopenings have been less widespread than they've been here. So that's no surprise. In addition, the participants in the sector usually give a mid-quarter update, and so we generally have a directional feel for where those same-store sales are going to be. On the positive end, hearing them say that they're going to invest more in digital and delivery is a plus. Generally, those are the names that have been rewarded in this sector, particularly the pizza names, as that's provided some support as people have shifted to stay at home.
You like McDonald's, it sounds like, Greg.
I think that there are others in the group that are more attractive. It's hard to argue with their financial strength and their resiliency and their ability to power through, particularly if we see a resurgence or a second wave.
Right. Which other names do you like better?
I think the pizza names are still the place to really look here. Again, they're among the strongest in terms of those two areas where investors have really rewarded, and that's in the delivery and in the digital sales. Chipotle is a strong name in those two areas as well. And so, we've seen in this market that investors are flocking to areas of strength, and those in this sector are by far two of the main things that investors have concentrated on.